So you're a hard money lender, Mike. If someone's stuck in a hard money loan, first of all, why does that happen? And second of all, how do they get out of it?
People are stuck in hard money loans because of two things. One, they haven't finished a project. Maybe they ran into construction delays, maybe permit delays or something like that. Something has slowed down their project. Where it was supposed to be a 6-month project, now they're 9 months, 12 months in. After 12 months, pretty much all hard money loans term out. So they're going to have to do something. So it's either the project isn't done and they need to get either more money to finish it, or they just need to get it sold. The other thing is we see some properties out there that have been on the market for over a year now. Even though the project's done, the property's sitting on the market, a lot of the borrowers just don't want to drop the price. They just don't want to get to the point where they have to drop the price and either not make money on it or even lose a little bit of money. But what's happening is they're sitting on properties for a year, paying interest for a year, paying taxes for a year and stuff like that. So sooner or later, they're going to have to get out of the hard money. Either the project's not done or the property's just not selling.
So people try to get out of hard money loans for a number of reasons. One, the loan just isn't working for them anymore. Or second, the property's been on the market for over a year. So like the reason they got the loan in the first place, they're not going to be able to pay it back right now. So they need to have some other option.
Correct.
Okay.
So let's look at a couple scenarios where someone has a project and they're just not finished. We see it a lot here in Colorado, Denver, where permits could take 3 months. It could take 12 months. They got into a project, needed some permits, slowed them down. We literally have projects that are over 12 months waiting for certain permits, going back and forth.
Wow, waiting for permits for over 12 months. Not on the market, but waiting for permits.
Yeah, so they haven't even got to get the property going here. They're just waiting for the county. And some of that is just them not getting the proper paperwork and stuff like that.
Sure.
So you have the property has just stalled. So typically what happens is with any lender, hard money, private lending, whatever you want to call it, the lender sooner or later stops the escrows. When they set up a loan, typically they'll give you all or a portion of the purchase price, and they'll set up an escrow account for the rehabs, for all the money. But if your property's sitting there for 6 months, 9 months, a year, and it's coming to term, the lender's not going to release those funds for the fix-up. So you're stuck. You got a property that needs some work. Your lender's not giving you money because property's just not moving at the pace they want, and they just want to protect themselves. That's one of the bigger ones out there. So what do? It comes down to 3 basic things. Refinance with another hard money or bridge loan and get it to the point now where the project is moving. You have the money now to fix it up and you can get it on the market. Number 2, you could just sell it as is. So there's other investors out there who want a project, who could come into a project. I think either of these, in all of these scenarios, as an investor, you have to understand every once in a while a project just does not work out. And sometimes it's better to get out when the getting is still good or you lose a little bit instead of what I see what some of these people are doing. The one guy who put it on the market almost 12 months ago, still sitting out there. So every month they're paying taxes, insurance, and interest, and the value is not moving. So every month for 12 months, let's just say their total cost is $4,000 a month. So in 1 year, they just spent $48,000 on interest, taxes, and insurance. So went nowhere.
Oof, that hurts.
Yeah. So it would have been better just to drop the price last year, take less, and get out. If the property's not done, sell it to another investor, get close to breaking even, get into a better project and start making money. Because if you're sitting in a project that long, it's sucking out your money because you're paying every month. Plus, you don't have time to get into a good project.
Yeah, it sounds like you fell prey to what's called the sunk cost fallacy. I remember learning about this for if you put a lot of money into it, you perceive it as more valuable than it is when it's like, that money's already gone. That's the fallacy. It's like the money's already gone. You're not getting it back. So it doesn't make it more likely that you'll get it or that you should keep going to try to make up for it. It's like, you got to make the decision. And it's so hard, I think, for people to make the decision that okay, I got to cut my losses here.
Yep. That's the biggest thing is they have to come to the realization that they have to figure out what the current market is, because the current market could be different than last year's market or 2 years ago, and readjust to the current market. And sometimes that's just brutally hard to do.
Yeah.
The other thing is the project isn't done. We do finish a project loan. So if a project is almost done, you ran over budget, the numbers are still good, you could get a small second. You could borrow some money from us or someone else just to finish it, to get it on the market so you can get it sold and move on from it. Most of that is like when a project isn't finished, what do you do to get out of a hard money loan? It's either find other lender that will take on the whole project, finish the project loan, or just sell the property to another investor or to a end user who would pay whatever you have into it or close to it and get out. Because just like the person before that I was talking about has had it for a year, Now they're looking at cutting the price. Now they're looking at maybe doing a short where they have to pay it off over years, but they would have not had that if they just sold it last year.
Mm-hmm.
And we've seen this over the last year or two where people have to come in and say, like, I'm going to take a $10,000 short. People like us work with them because it's smarter than paying $4,000 a month and being 3 or 4 months out, and there's $12,000. You still have to take a short.
Yeah.
So you just paid 3 months. You just paid $12,000, $4,000 a month. Plus you have to take a $10,000 short. So now it's $22,000.
Mm-hmm.
It's hard. We realize that, but sooner or later, this is business, and businesses make money. Sometimes on a project, they just don't.
Well, where can people reach out to learn more about the process here and about how to rework their hard money loans if they need to?
Yeah, so reach out to hardmoneymike.com. There's a quick deal analyzer. There's contact us. And I was also going to go over, like, what do you do if the project is done, just like the guy's talking about.
Gotcha.
Number one, that people sometimes have to come to realize is it's better to maybe take out a permanent loan or a long-term loan, pay off your hard money lender, make it into a rental, even if it was going to be a fix and flip, and maybe you still lose $200 a month. By losing $4,000 a month or $200 a month,
Yeah, that's a big difference.
it's a big difference. So
Yeah.
sometimes you have to look at it and go, like, if I lose $200 a month, in a year, that's $2,400. So I have about 18 months just before I lose what I'm losing in 1 month.
Mm-hmm.
And maybe in a year, 18 months, 2 years, the market switches. Or maybe it's just a great write-off and take some of the burden off your taxes because you could depreciate and stuff that property. So some people need to look at refinancing it, keeping it as a rental, keeping it in their portfolio, looking for other refinance options, going to a bank, looking at the DSCR traditional loans, getting into some cheaper money instead of a hard money loan. Hard money could be anywhere from 10 to 12%. Bank loans, DSCR could be in the low sevens. That's a big difference when you're paying a monthly interest. Getting into something cheaper so you could have less going out is sometimes what you have to do too. It's a tough decision sometimes. Sometimes it's an easy decision. I just don't like my lender. I just need a new lender. Mm-hmm. But a lot of the other times it's just like, don't let it take you down. Don't let you get into bankruptcy or foreclosures and all that stuff and maybe tie you up for 7 years with your credit and all that other stuff. Sometimes it's just better to take the hit, refinance it, sell it, whatever you have to do, or find another hard money lender and pay some closing costs and all that stuff, but keep the project going, get it done as fast as possible. As they say, pull the bandage off as quickly as you can and move on.
Yeah, I hear that. So this last option is, if you need to, you can refinance that hard money loan and turn what was going to be a fix and flip into a rental. You might still lose money, but you might lose a lot less money, potentially.
And sometimes you're making money.
Yeah.
We looked at a scenario where you're going to lose a couple $100 a month. A lot of cases, you're going to make a couple $100 a month. And if you're not into the rental game, just get a property manager, let them handle it.
You're right.
Go through that. And instead of taking on a big loss down the road, you're just creating an asset. So if you have a property that's already on the market, it's just not selling. Mm-hmm. Another trick with that is don't keep dropping the price if you're going to keep it, because the appraiser can never appraise it for more than it was listed for. So if you keep dropping the price, it's going to hurt you when you go for a refinance. Got to make a decision quick, go one way or the other. Drop it as low as you can and just sell it for a loss, or keep it where it is and get a refinance. Refinance into it like a DSCR, a traditional loan, or a bank, local bank, because some of those will even go at higher loan to values. So that's if the project is like someone could move into it, it's done. And if it's not done, then you're going to either have to sell it to another investor, finish a project loan to get it done if it's almost done, or you're just going to have to get another loan to take over for the other lender. Because most lenders, once they hit their term, project's not moving, they just want to move on. They're not going to keep it going. So you're going to have to bite the bullet and get a new loan and move on with it.
Well, thanks for the info today, Mike. That all makes sense.
You're welcome.
So that's what to do if you get stuck.
Yep. And like I said, you can just go to hardmoneymike.com. And if you have a question or how do you position this or how do you do this, we'd be glad to help.
All right. hardmoneymike.com.
You got it.
Cool. Thanks, Mike. Yeah.
Yep.